You're listening to the Unlocking Africa podcast.
There's clear mechanisms in place where investors, whether it's institutional or retail investors, can go onto platforms and invest in those financial assets. For you to access the budget facility for infrastructure in South Africa through National Treasury, you need to have been prepared in a manner that the Treasury will fund you. We can increase that awareness to a level where somebody's earning $1 per day in terms of infrastructure investment. If I'm putting money in something, I want to know where the money is going, being used for the project and not for other unrelated matters.
Stay tuned as we bring you inspiring people who are unlocking Africa's economic potential. You're listening to the Unlocking Africa podcast with your host, Tessa Adamu.
Welcome to the Unlocking Africa podcast, where we explore the ideas, innovations, and strategies that are driving Africa's economic growth in the 21st century. My guest today is Joseph Kihara, Africa Practice Lead at Africa International Advisors and the author of a powerful new piece titled The Roads We Never Build, Rethinking Access to Infrastructure Finance in Africa. In it, Joseph makes several bold but important arguments that we will be discussing today. So let's dive straight in. Welcome to the podcast, Joseph. How are you?
I'm doing good. Thank you so much, Tessa, for having me.
It's a pleasure to have you on the podcast. So we're here to discuss the new piece that you titled The Roads We Never Build. I know in it you argue that Africa's infrastructure problem isn't about capital, but about access. Can you explain what you mean by this?
Yeah, sure. So thank you so much for that question. So if you think about where we are now, and for example, South Africa, there is a lot of capital that is in the country coming from your large banks or even your pension funds. So if you think about them being as institutional investors, they are constantly seeking for long-term assets that are aligned to their risk profiles. And what that means is, from an African perspective, they do not potentially meet those investability threshold. So basically, you find that this issue is not just about that supply, but rather it's about those funds actually reaching those credible projects. So for an example, if you think about for yourself, if you say you wanted to invest in a water project in, let's say, Malawi, where do you go to invest in that project? So you do have the money, yes, but then you don't have access to where the project is. So it's a matter of, number one, that visibility. Number two, that misalignment between risk and return. As an institutional investor, I would potentially just want to invest my capital in your typical stocks, bonds, and potentially if you're in the private equity space, then you invest in companies. So that's just that in a nutshell, in the sense that, yeah, capital always flows, where there's that visibility.
You touched on some key points there. So with regards to access, is this possibly driven by how we perceive infrastructure in Africa?
Yes, that's correct. So in Africa, what the perception about infrastructure is overlaid with a lot of, risk profiles, country risk, there's even political risk, there's even an assumption for corruption. And what this does is, if you think about money, let's say a sovereign wealth fund that comes from your UAE perspective, they will want to price that risk in. And what they will do is, as much as they will invest in a specific project, let's say in a country, they would want specific guarantees in place from the government to ensure that payment is made. So risk perception is potentially over-exaggerated in Africa, not because the risk is not there, or rather not because the risk meets those thresholds, but because maybe the people who are assessing that risk are not even localized. What normally these credit agencies do is they will potentially rate, let's say, America as, triple A, and rate a country as, let's say, double B negative, and that impacts investors a perception about Africa and, the amount of leeway they have or the amount of risk they would want to potentially invest in these regions.
You've touched on this with regards to the risk perception, but if we can look at this a bit further, why do you think the current finance system is misaligned with the actual realities on ground in Africa?
So that's a good point. So if you think about traditional financial instruments, and I've mentioned this, so if you have your equities, stocks, bonds, and other instruments, what those do is there's clear mechanisms in place where investors, whether it's institutional or retail investors, can go into platforms and invest in those financial assets as they need to or as they please. But if you come to Africa, in East Africa as a whole, you're seeing a lot of penetration in terms of mobile money. And to a certain extent, people who are unbanked have access to liquidity that even banks can't access, right? So what that means is if you come into a country like that and come with a framework that has worked, let's say, in a different geography, it will not potentially apply because you are applying a framework that aligns to people who have access to apps, as opposed to a country where people use mobile money and their phones they even use are not even smartphones. So what that says is we have all these generic frameworks we want to apply in Africa, but then not necessarily saying that they will be successful. In my article, I speak about the Grand Ethiopian Renaissance Dam and how they financed that was, through government support, but also them creating that awareness in the local economy to ensure that people understand why this dam is important to them. And again, infrastructure is not about just buildings or roads to look beautiful, but it's about creating jobs or creating growth through job creation, through the development of that specific infrastructure, but also allowing you to, or them becoming an enabler to facilitate trade between regions. So that really is the thinking that only African solutions can work for Africa. That really is at the heart of it. Yeah, we can't take a different solution that works in a different country and bring it here and say it will work.
You touched on the Grand Ethiopian Renaissance Dam. What lessons can other African governments learn from Ethiopia's financing model?
Yeah, so what that case study does is it shows that scale is possible really without waiting for institutional consensus. So what they did really well, the government of Ethiopia, is they mobilized domestic savings, they mobilized diaspora bonds, they also mobilized budget allocations. And what this did is, it proved that Ethiopia can provide that alternative financing even when international backing is not there. So if the political will is there and there is coherent structuring and you create the awareness at national, provincial, local level, all the way to community level, and there's that coherence in terms of and awareness in terms of what everybody's role is, then that brought everybody together to a point where they could invest in that dam. So keep speaking about mobile money. If you think about demographics, think about Africa in a whole, Africa is projected to be by 2050 or 2030 have one of the largest youth populations in the world, right? And if you start thinking about the penetration of mobile money, and the question becomes, can we access an untapped market where if 100 million people contribute 2 rands, and I'm saying this is very simplistic in the thinking, but if 100 million people contribute 2 rands into a dam that is going to generate 10x that, and you create that awareness in the market, then those 100 million people, will have ownership of that specific infrastructure. So things to do with vandalism will be reduced because they understand that my money went into this, and this is how it's benefiting me, how it's going to benefit my people after me, and they will make sure that the infrastructure is protected. So we need to start looking at it from that perspective, as opposed to looking at it from we need to consistently rely on donor funding or loans or grants from international community, as opposed to utilizing whatever we already have and scaling from them.
From what you've mentioned, I guess GERD, it showed the power of domestic financing. But from your perspective, do you think other African countries can realistically replicate such an approach?
Yes, but it really requires political cohesion. So thinking about it from how do we develop the project through a phased approach, phased design, how do we mobilize citizens? And not every country, can mirror what the Ethiopian conditions, but in the principle of leveraging local trust, domestic finance, that is something that you can replicate. So if the political will is there and the cohesion is there, and you take a phased approach, the dam wasn't built over a short period of time. It took a number of years to start construction and to finalize. And people are clear in terms of what the end state is, then it is possible and that can be replicated.
Going back to your point about access, we know that capital isn't a problem, but obviously many projects similar to GERD fail to reach financial close despite available capital. What would you say for those type of projects has been the biggest challenge or the cause for that disconnect?
Sure. So if you think about the projects that really do not achieve financial close, it would be from a perspective of either the project wasn't well prepared. And I can give an example about South Africa. So what normally happens is for you to access the budget facility for infrastructure in South Africa through National Treasury, you need to have been prepared in a manner that Treasury will fund you. So you need to go through project preparation, and that's obviously something that needs some technical and financial expertise. Then from there, you need to be able to allocate the right team to ensure that they have the same technical capacity to ensure that the project. And when I say technical capacity, I'm not just talking about your engineering firms only, but also your project management, because some of these things, what happens is if you don't have the right project managers, if you don't have the right technical team, some of these projects can experience delays. And, again, they don't get funded because, the perception again to the investors becomes this is a risky project. And even if we won't invest in the project that there's potentially doesn't have the right team, and that becomes an issue. So it's more of a capacity thing. It's more of a fragmentation thing where people don't know where to go. A lot of project sponsors are going to different institutions to look for project preparation funding. And you find somebody went to a different institution as opposed to, let's say, going through the National Treasury guidelines, and the project is prepared in a manner that doesn't fit those guidelines. And again, that impacts the ability to achieve financial close. It's a number of factors, but I think those are the main ones that, impact that, yeah.
I guess another factor is that Africa's infrastructure has historically been designed for extraction. How would you say that legacy is still shaping investment priorities today?
Yeah, so that's a good question. So if you think about the current corridors that are in place, and if you think about the kind of roads that are in place, they were not really meant to increase the trade and integration within Africa. What that has done is they were created so that the raw materials can reach your Asian, European markets, or even your Western markets. And what that has done effectively is it has created a vicious cycle where more investment is going to continuously upgrade this current infrastructure, because a lot of volumes are going through those corridors. And what that means is the question that governments or even political institutions are saying is, do we create new infrastructure corridors and just do away with this? Because the question here is, do you want to lose out on revenue, or do you want to continue gaining revenue, but keep exporting raw materials? So then that balance of the decision will be made by a number of people and factors. So if you think about the current corridors, let's say you have your Mombasa or your Lamu ports, those are ports that serve your inland landlocked countries such as Uganda, in terms of your export and your trade and whatnot. The question is, the government of Kenya can't just go and say we'll develop infrastructure to increase our trade with the East African region without consulting or rather considering the trade implications with Uganda and the revenue loss by doing that.
I guess connected to what you've just mentioned in terms of intra-Africa trade, in your view, how does the African Continental Free Trade Agreement change the kind of infrastructure Africa actually needs?
So I think AFC, FTA really, requires that integration, right? Again, the idea behind it is that integration. So we need to have proper planning. And when I say proper planning, I mean we need to have those transport linkages. We need to have those cross-border energy grids. And we're starting to see this in the market. For example, if you think about the East African power pools, the East African power pool and East African power pool, we are starting to see some power purchase agreements being signed. For example, in Malawi, there's a power purchasing agreement to procure gas from Tanzania for a gas to power plant that is in Malawi. Then if you think about the interlinkers or the interlinkages between the transmission lines, we have Zambia to Tanzania interlinking transition line, which allows power to move between the countries, and you have your Kenya and Tanzania. So basically, what we are seeing now going forward on the positive side is we're starting to see, your power grid or your pools starting to integrate more and more and more. And then that can be a strong enabler for all these other factors. Because energy in itself is, you can't necessarily say it's a sector alone, but it can be seen as an enabler. If you can get access to cheap energy, then that can help you to industrialize. And once that industrializing, then you can start speaking about how do we continue to integrate through these developments of corridors. And now these corridors are digital, because even now we do have those digital corridors of fiber, wireless cables coming in through the ocean into Kenya and going into specific countries inland, such as Uganda. And you have all these power linkages in terms of the power pools, in terms of the grid. But what we need to do next is how do we support industry value chains and start to connect them in a manner that creates value for the region and eventually the wider continent.
This is Verto Corner, powered by Verto. Today, we're diving into how strong account management can turn one-time customers into long-term growth partners. Here's Robert Hallam, Director of Account Management at Verto, with how retention truly drives results. Take it away, Robert.
Thanks, Terza. From our perspective, we see retention as the hidden growth engine in any B2B business. At Verto, we see that every day. When a client chooses us for their cross-border payments, that's just the start of their relationship with us. When the account management team sort of kicks in, we sort of aim to deliver on that first promise, whether it be reliable payments, transparent pricing, and a strong operational support. But then we go further. We really need to understand their business model, their pain points, and what it is they're trying to grow. From our perspective, it isn't a passive approach. We are a proactive engagement model. For example, we might have a PSP that might come to us looking to just trade something like Naira to dollar on FX rails. But if we dig a bit deeper, we might discover they're looking at maybe collections in East Africa, or they want to hedge currency exposure elsewhere, or they need faster reconciliation tools. By surfacing those needs early and looping in product or our sales teams, we can help them expand their use of Verto. That growth wouldn't happen if we kind of just sat back and waited for them to trade. Retention is also building trust from our perspective. We operate in some of the most complex corridors in the world: Nigeria, Francophone Africa, India, and China. These clients stick with us because we've proven time and time again that we can execute safely and compliantly. That trust lets us have commercial conversations about alternative pricing, volume commitments, and new product adoption that directly increase revenue. Finally, I think from our perspective, retention feeds back into the business. Data from account management helps product prioritize new features, helps risk improve onboarding, and helps commercial teams refine their go-to-market strategies. This creates a flywheel. The better we retain, the more we learn, and the faster we grow. So Verto retention isn't just a metric, it's a growth strategy. It's how we protect the revenue we already have and how we unlock new revenue streams from clients who already trust us.
Thank you for that, Robert. You touched on the fact that Verto operates in some of the most volatile and high-risk markets. So if we stick to the theme of risks, what would you say is the biggest risk when businesses don't focus on retention?
In a sentence, you'd probably describe it as you end up running just to stay in the same place. New client acquisition is expensive. If you lose a customer as fast as you bring them in, you burn resources and you never see that full ROI on onboarding costs. What's worse, churned customers talk to each other, and reputational damage can slow growth even more. Retention is how you turn revenue into sustainable and compounding growth.
So if we look specifically at those markets which Verto operates, which a lot of them are within the African continent, would you say that the strategies differ for African clients versus other markets?
Absolutely. My background is across sort of various established markets, most notably North America, UK, Europe. This is my first entry into sort of working with African entities. I would say from my experience so far that, to your question, yes, trust and reliability matter even more. In Africa and other emerging markets, clients operate in environments with, as you pointed out, sort of highly volatile environments, whether it be from FX, regulatory uncertainty, and limited infrastructure. They value partners who can deliver consistency and keep them compliant, most importantly. Retention here is about being a safe pair of hands, providing that white glove service. So if you can get money in and out reliably, they stay with us and we can grow faster.
So if you look at those African clients and the service and the work that you offer to them, can you share a client story where, I guess, solving a challenge has led to stronger loyalty?
Absolutely. I mean, the solving challenges and complex issues is a daily occurrence for our team, okay? I think one example of we've got a key client who uses us to remit money, transfers from Naira to dollar and remits it back into North America. On a daily basis, he's experiencing delays in settlement into his account, okay? So we are in constant communication with him to help settle this. These delays are putting a strain on his supplier relationship or his end client relationship. So our team are constantly escalating internally, securing emergency workarounds to get these funds settled in a timely manner. This experience that he goes through on a daily basis that I've been firsthand witness to as well, it's built trust so much over the last few months that I've been here that we're starting to expand that relationship into further conversation about what more products he can use into other regions. He can expand his own business that we can supply him with those rails.
So if we look closer at your role as an account manager, what's one thing every account manager should prioritize with regards to gaining loyalty and supporting clients in these high-risk, volatile environments?
I think what I've sort of experienced within the sort of markets that we operate in, honesty and speed and consistency of communication are the sort of the pillars in which we kind of operate on, okay? We have a very active client base who chat to us over various sort of mediums, whether it's email, WhatsApp, other sort of messaging tools. We need to be online and respond in an extremely timely manner, okay? In a region where we've already discussed where there's consistent delays within a fractured banking system across the continent, we need to be able to supply that insight and that guidance, that white glove service I referred to earlier, to make sure clients know exactly what's happening on our side and they see the full sort of journey of their funds so they get from point A to point B in a timely manner. But we're constantly providing that insight consistently and being upfront and honest about how the transaction is progressing or what problems we're tackling internally. From my perspective, that's how we gain trust with our client base in these regions, and it's proved successful so far.
Big thanks to Robert Hallam for that deep dive into client retention and growth. If you want to strengthen your account management strategy, check the show notes for more insights on how to contact the Verto team. We'll be back next week with more from Verto Corner. And now back to our interview. When we think about after, we, I guess, ultimately think of products and services and not so much the people. I know you describe Africa's population as an untapped finance engine. So what steps can countries take to unlock citizen and also diaspora participation?
Yeah, so again, it goes back to the access question, right? If you think about Africa, And if you think about, and this can be very contentious, that we've created so much awareness around sports betting. The advertising has been centered around you can become an instant millionaire overnight. And the question becomes, if some of the sports betting institutions, and Africa, in some of them, I read somewhere that Africa is the second largest market outside Europe, which for me was odd because they're speaking about not people not having enough money for food, but sports betting is a thing. So if we can do that in terms of sports betting, then that means we can increase that awareness to a level where somebody's earning $1 per day in terms of infrastructure investment. So what that means is if somebody has even 10% of their money can go to infrastructure development and they see the value in that, and through increased access. So we keep speaking about mobile money. Mobile money can be used as a platform to move money from those mobile wallets into a specific platform that allows you to invest in infrastructure. Because right now, access to infrastructure financing is limited to, especially the strategic ones, it's limited to triple Ps. So either the government takes up a specific obligation and brings in the private sector to participate, and largely most of these private sector participants are at an institutional level. But then why can't we take the model where companies go to an IPO, for example, and you have the small investors who can come in and buy a small share of a bigger chunk? So you want to raise $100 billion to build a dam in East Africa, then you need to give the platform to East Africans, population which is more than 150 million, to access that infrastructure development financing. And how you do that is you create specific instruments, the way you do for real estate, such as a REIT. You can potentially create a strategic infrastructure trust, which allows you to invest even $20 or even $1, and $1 from 50 million people, that's 50 million USD, which you've raised from retail investors. So access, awareness, and access comes from developing those platforms, those instruments that allow people to participate. Nowadays, we have apps such as Binance. Binance allows you to access your cryptocurrencies. People in Africa I invest in cryptocurrency, but I can't say I know where the crypto is because I have Luno on my phone and I can do that. So why can't I have access to infrastructure through such an app that allows me to invest a certain proportion in infrastructure instruments? And I think that really is critical.
You touched on the role of digital platforms in enabling micro investments into infrastructure projects. To enable this requires trust. So how can governments build trust so that citizens do feel confident in investing in long-term infrastructure projects?
Yeah. So I think the only way the government will build trust would be by creating the necessary capacity and ensuring the delivery in terms of projects increases. So trust is not something that you give to someone. Trust is earned, right? I guess when it comes to governments and sovereigns, it has always been, and if you think about how the banking sector started off, the banking sector started off from the perspective of, smelters of gold. There was, you would go and say, I want you to transfer an amount to someone, and then they cut the gold for you, they take it. Then it became a thing of they gave you paper, then paper became they hold your gold reserves, then they just start moving paper around because they created that credibility in the market to ensure that people can trust them. And that really is it. Like if the government creates the necessary capacity to execute on this project successfully, then that trust can be built. But then we can't really put aside the fact that, engagements and also creating that awareness locally is also important. And just painting that picture, what the end state looks like, and telling, individuals or telling the population that this is why we're doing this. This is why it is important for us to do this. If you think about how China has done it in terms of building the Great Wall of China, or even if you think about the planning in terms of China, it's not over a decade, it's over hundreds of years. So how do we not plan for the next election cycle, which is 4 to 5 years, which is what most African countries do, as opposed to saying that we're going to plan over the next 100 years. So even if I leave power, my role here is to make sure that we're delivering on this objective over the long term. So planning for the long term also becomes critical in building that trust, because once an administration changes, then somebody comes in with their own ideas that might not fit into, the bigger picture.
Keeping on the theme of building credibility and also execution, in the article you note that infrastructure finance rewards reliability. Which African countries or sectors would you say are building that track record today?
Yeah, so if you think about the sectors that are currently hot, it's your energy. Energy, not necessarily, again, it's not necessarily as a sector, but it's more of an enabler, because without cheap access to energy, it becomes extremely hard for you to industrialize. So all these infrastructure projects that come in terms of transmission lines, in terms of your distribution lines, it's more about bringing in that access to that energy. Then also in terms of, sovereigns wanting to push or rather to increase electrification around geographies, that also has pushed financing towards the sector. And you find also the fact that, we are going through a transition. So through the just energy transition, what this means is we are seeing a lot of investment in renewables or more cleaner sources of fuel, such as your gas, or, to support, the renewables rollout. The other element, it's your agriculture and healthcare, where, as the population continues to grow, people need more food to eat, need more healthcare services. And, we're seeing a lot of investment in terms of, from a large scale perspective, just to enable those specific sectors. So I think those two, together with just improving the logistics sector, whether it's through trains, because once you have your produce, once you have your goods, and once you have these agreements in place, it's easier for people to move around. Again, population dictates what kind of transport people use. And in crowded areas, trains become quite important just to allow for ease of movement.
I guess to achieve this requires government involvement, government reform. What governance or government reforms would you say are most critical for improving investor confidence in African infrastructure?
Yeah, so I think one of the biggest things is having standardized triple P frameworks. And what this means is sometimes private players don't want to participate because either their processes or timelines are misaligned to those of government. And that, does add to the level of complexity of the transaction. But over and beyond this, there's that security of tenure, where if an investor invests in a specific infrastructure project or region, they want to have the confidence that the government would wake up one morning and take away that property, right? So enforceable contracts becomes critical, and having a transparent, procurement process, which, allows or increases the credibility of the entire transaction, but also looking at how you can professionalize project special purpose vehicles with ring-fenced cash flow. So what this means is, if I'm putting money in something, I want to know where the money is going, and the money is actually being used for the project and not for other unrelated matters. So case in point, if I've committed 100 million towards the healthcare sector, I wouldn't want the project owner to go ahead and use that money to do other things that are unrelated to healthcare, let's say agriculture, and that becomes a big challenge. So I think those kind of reforms become critical because it allows for funds to flow and to build that trust with the private sector.
So I guess if we look at it from a different perspective, if you were advising African governments or ministers tomorrow, what immediate steps would you tell them to take to fix access specifically?
I would tell them that, look, I think one of the biggest things that they can do is, fund proper project preparation. So if a well-funded or prepared project reduces the risk of it not achieving financial close, also creating those pools and aggregation vehicles to attract scale. And the other thing would probably be enabling locals and the diaspora to access those specific infrastructure projects, because what we are doing is we are potentially not utilizing that source of capital yet, and yet it's still there, right?
Yes. So if we look at it from a different perspective, how can private sector leaders such as entrepreneurs and investors, I guess, play a role in reshaping infrastructure finance?
It goes back to the point I made earlier. If you think about institutional players, if I walk to a bank right now, I can be able to access a bond or an equity instrument, but I won't be able to potentially access infrastructure at that level. So maybe they need to create innovative financial structures. They need to launch specific digital platforms that allow you to have ease of access of the specific projects, either through your banking app or through an SMS service that also allows the people who don't have smartphones to access these projects. So on top of this, there needs to be that element of co-sponsoring infrastructure, special purpose vehicles that really can even crowd in both private and public capital.
Thank you for sharing that, Joseph. So again, if we look at it from a different angle, what would you say are some of the misconceptions international investors have about African infrastructure, and how can that be corrected?
So normally investors really assume uniform high risk and low return across Africa. So people say Africa is a country. That's not the case. So in reality, risk varies by country. If you think about investing in East Africa is different from Somalia, Kenya, Uganda, Tanzania. So the risk is very different. So how we correct this is we need to have, again, transparent data records. The issue with Africa is always about information asymmetry, so you need to have better data access, right? On top of the fact that you need to have standardized risk frameworks that can be applied and actually make sense for African geographies.
Brilliant. So I guess if we look ahead, look into the future, in 10, 15 years, what does Africa's infrastructure landscape look like if we solve the access challenge?
So the vision, and this is my personal vision, is Africa will move from, that country, that is seen to be the export hub. So moving from a patchwork of export routes to an integrated system that has regional grids, urban mass transit, but also has those digitized, trade corridors, as well as, having citizen-owned and backed-up infrastructure, vehicles and projects. So basically the result here is the foundation of industrialization, urbanization, but also continuous and resilient growth.
Quote of the week.
As people, we often have quotes, mantras, proverbs, or affirmations that keep us going when times are challenging or when times are good. Do you have one that you can share with us today?
I would say that reminding myself, so I don't have a quote, but I can just have, an idea, right, or a thought, is reminding myself of how I got here and being positive with the fact that where I'm going to reach there, as much as, a lot of activities and changes will happen along the way. So it's the journey that matters. I think that is the quote.
Brilliant. Thank you for sharing that with us. Joseph, it's been a pleasure having you on the Unlocking Africa podcast. So huge thank you for sharing your insight, experience, and also the valuable nuggets you shared in your piece that we've discussed today. We've discussed everything from Africa's infrastructure challenges and how it's less about money and more about access. So yeah, it's been a great conversation and it's been a pleasure having you on the podcast.
Thank you so much, Teza.
Thank you to everyone who has listened and stayed tuned to the podcast. If you've enjoyed this episode, please subscribe, share, or tell a friend about it. You can also rate, review us in Apple Podcasts or wherever you download your podcast. Thank you and see you next week for the Unlocking Africa podcast.